Welcome to FX Tech, your source for professional Forex analysis. This week, we're breaking down the explosive rally in the New Zealand dollar versus the US dollar for the week of November 24th to 29th, 2025. A stunning turn of events saw the Kiwi surge over 2.5%, driven by a landmark decision from the Reserve Bank of New Zealand. In this report, we'll dissect the fundamental drivers, technical breakouts, and what this watershed moment means for traders. Stay tuned as we explore the key levels and strategies for navigating this new market landscape. This analysis was prepared on December 1st, 2025. The market was electrified this week as NZD USD soared to its highest level since early November, closing at 0.57348 for a massive 2.59% weekly gain. The catalyst? A hawkish cut from the RBNZ, which cut rates as expected but signaled the end of its easing cycle. This sent shockwaves through the market, causing a dramatic repricing of future rate hikes and making the NZD the top G10 performer on November 26th. The move also confirmed a powerful technical breakout from a multi-month falling wedge pattern, setting the stage for a potential major trend reversal. Let's dive into the pivotal RBNZ decision. On November 26th, the board cut the official cash rate by 25 basis points to 2.25%, which was widely expected. However, the details revealed a surprisingly hawkish tilt. The 5-to-1 vote split, with one member voting to hold rates, was an unprecedented signal. Crucially, the forward guidance shifted to neutral, with the bank stating future moves depend on evolving data. Governor Hawkesby added that further cuts face significant hurdles. The market reacted instantly, pricing in a probable rate hike by September 2026, effectively ending a 325 basis point easing cycle. The RBNZ's hawkish pivot was validated by a string of incredibly strong domestic economic data. Q3 retail sales surged by 1.9%, smashing expectations of 0.6%, and marking the largest increase since late 2021. Furthermore, ANZ Business Confidence soared to an 11-year high of 67.1, with firm's own activity outlook hitting its strongest level since 2014. ANZ Bank noted that these are not just sentiment-driven green shoots, but signs of real economic momentum. This robust recovery, following 325 basis points of stimulus, reduces the need for further easing and provides a solid foundation for a stronger currency. A key driver for NZD USD is the widening policy divergence between the RBNZ and the US Federal Reserve. While the RBNZ has officially paused its easing cycle, the Fed is still expected to cut rates, with markets pricing an 83% probability of a cut in December. This is fueled by softening US economic data, including a tumble in consumer confidence. As the interest rate differential begins to turn in the Kiwis' favor, and with the US dollar showing signs of weakness, the fundamental backdrop is becoming increasingly supportive of a stronger NZD/USD. From a technical perspective, this week's rally was a textbook breakout. The NZD/USD pair decisively broke out of a falling wedge pattern that had been in place since July 2025. This bullish reversal pattern was confirmed as the price surged through the 50-day moving average and the upper channel boundary. Momentum indicators are also turning bullish, with the RSI crossing above 50 and the MACD showing a bullish cross. By convention, a breakout from a falling wedge often implies a return to the pattern's origin, suggesting a long-term upside target near the 0.6000 level. For traders, understanding the key technical levels is crucial. The long-term upside target is now 0.6000, the origin of the falling wedge. Before that, the pair faces major resistance at 0.5850 and a primary hurdle at 0.5800. The zone between 0.5690 and 0.5720, which was previous resistance, has now become a critical pivot zone and initial support. A minor support level sits at 0.5639, Most importantly, the November low of 0.5580 is the critical support floor. A break below this level would invalidate the entire bullish thesis. In the short term, for the next 1 to 2 weeks, our outlook is cautiously bullish. The immediate trading range is between support at 0.5690 and resistance at 0.5800. While momentum is bullish, intraday charts are showing overbought conditions, suggesting a pullback is possible. The strategy is to watch for a dip to the 0.5690 to 0.5720 support zone. If this level holds, it opens the door for a test of 0.5800. A break above 0.5800 would target 0.5850, while a failure to hold 0.5690 would signal a period of consolidation. Looking at the medium term, over the next 1 to 3 months, our outlook has shifted from bearish to neutral positive. The RBNZ's pivot has established a fundamental floor for the currency. The expected trading range is between the critical support at 0.5580 and the upside target of 0.6000. While the path higher will likely be volatile, the combination of a paused RBNZ and a dovish Fed supports a move towards the 0.6000 target. The bullish thesis remains valid as long as the price stays above the November low of 0.5580. In conclusion, the week of November 24th marks a potential watershed moment for NZD/USD. The powerful combination of a hawkish RBNZ, strong domestic data, and a weakening US dollar has created a compelling bullish narrative. This was confirmed by a technical breakout from a multi-month downtrend. The key challenge for bulls is to hold the 0.5700 level as support on any retest. While the long-term bearish structure is not yet fully invalidated, this week's events have provided the strongest signal yet that a major trend reversal is underway. Thank you for watching.